Everybody, my name is Hadley Gamble. I am the Al Arabiya Chief International Anchor as well as a columnist for Semaphore. I'm thrilled to be on this panel and introducing this topic for all of you. We're talking about hard power and the wake-up call for companies in the wake of the election of U.S. President Donald Trump, his inauguration, of course, yesterday, and what that will mean for the global economy over the next 4 years and over the next few decades. We've also been talking a bit about reshoring on corporate earnings. That's been something that's on the rise. Global tensions unlikely to ease in the coming years. So we're going to get all into it now. I want to introduce my panelists. I'm very thrilled to have this lady next to me, Her Excellency Yuliia Svyrydenko, His Excellency, the Minister of Economy of the United Arab Emirates, Abdulla bin Touq Al Marri, the founding partner and CEO of Macro Advisory Partners in the UK, Nader, Mousavizadeh, as well as Nader, the CEO of Bridgewater Associates. Gentlemen, Your Excellencies, welcome. I want to kick it off, actually, with Her Excellency and just get a sense from you about where we are in the investment case for Ukraine. Donald Trump inaugurated yesterday. He's been very clear about the fact that he wants to end the war as soon as possible between Ukraine and Russia. And there are a lot of companies that are present here at the World Economic Forum who've committed to getting into Ukraine and investing. Where are we with that?
So first of all, I think that Ukraine want to end this war more than others, and but it's not the matter of the criteria that it should be so quick. But it should be criteria of the peace based on the understandable terms and conditions for Ukraine, and it should be, of course, the component for the guarantees, because you just tried the issue on the businessmen and businesses and private sector. All businesses were met with during Davos and previously, raising just one issue. So how you can help us to solve the problem with security guarantee, because we need confidence and we need to be sure that this guarantee will prevent Putin from invasion to Ukraine in the next few years. So even if the war will be ended during this year. So that's why I think that we're doing our homework. We are providing reforms. Even during the wartime, we are responding all requirements from EU side, because we are on our path to EU. And we providing war risk insurance right now with DFC, with MIGA, with EBRD, our own expert credit agency, local one, also providing insurance guarantee, because it was requested during the first Davos, I remember, during the wartime in 2022. And we allocate all projects from private sector and public, actually one single project pipeline and investment guide. Now we understand perfectly well that everybody is waiting for the ending of the active phase of war. But then the question is, what would be the security guarantee? And here we have businesses in this room. So, and I want to, to apply to you and to say, look, you're waiting until the government of Ukraine, of US, European Commission will solve the problem with guarantee. But you also have the market power, and you also can change the global order. To do so, you need also to give the description what kind of security guarantee you need. You need more anti-missile system in the industrials, or you need troops, or you need NATO. So that's why it's also on this stage, I think that it's also time for businesses to be more vocal on this kind of things, and also to help us in this issue, because actually I think that we need to get to EU, and you need Ukraine not less than vice versa. So you're
saying businesses, corporates should be pressing their governments
corporates should be
to end this conflict?
More vocal, because they should believe in themselves that they also can definitely change the global order, and if they need security guarantee, that should apply together with us.
Yeah. Your Excellency, you're also, of course, an investor in Ukraine. We just discussed this backstage. Minister Al Marri, when you think about it, things going forward, if Donald Trump is successful in ending this conflict, all those Russians that have taken up residence in the UAE, do you believe they're going to head home?
Well, I think first of all, we are very supportive to the Ukraine government. And we have signed a comprehensive economic partnership agreement. And we are very advocate on pushing the trade between us and Ukraine, and moving the Ukrainian products as well, and redesigning supply chain across. Our economy is very vibrant. We're growing from 5 to 6% of every year on year. We have growth this year expected by the IMF above 5% total GDP. Non-oil GDP, we are expecting more than 6%. I'm very greedy, I want 7. I'm 75% non-oil GDP in my economy. So overall economy is on growth. I have 3 years ago, I had 500 to 600,000 companies registered in my national economic registrar. And it was that average population of registry for the last 3 decades. Today I have 1.2 million, and I'm expecting another 300,000 companies to come in. UAE always build a bridge, always designs a supply chain. We have 20 plus CPAS signed, and the target is to sign 26 more, and this was three years ago target. My 1 million company target was 3 years ago. I hit it this year, and it was for 7 years ahead. I need to change my targets, increase it to 2 million companies registered in my national economic registrar. Now, that's a problem for traffic in the country. We have a lot of traffic happening.
It's true.
But Dubai has something as well. Dubai came up with a plan, said we need to make the city more of a 20-minute city to get people moving in and out easily. And that's going to need another decade or so to design the infrastructure in doing so. So yes, we are ready for the world. We are very open. We need corporations as well to really think about the UAE as a place. Now, when you look at the UAE, we are about 9 to 10 million, 12 million population. But when we go into trade, we are more than, let's say, 3 trillion dirhams, which is about $800 billion worth of trades. But we are 12 million. So where does this 800 billion go, right? So when you look at it is, we offer not 300 million, we don't offer 9 to 10 million population, we offer the 300 million population of the region. A lot of companies who are based in the UAE operate from everywhere, anywhere. 8 a.m. in Dubai, Abu Dhabi, is about 12 p.m. or midday in Japan. Midday in Dubai is about 8 a.m. or depends on the winter timing in London. And 5 p.m., those in New York and DC, it's about 8 a.m. in the morning in the US. So if you open shop in Dubai or in the Abu Dhabi, you're actually operating the whole world.
It's a 24-hour environment.
It's a 24
as I
hours
know.
environment.
I haven't been sleeping for a few years.
Right. You're based in Dubai and you're based in...
But again, sir,
Yeah.
Russians, you're not worried about them headed home?
Well, we have an economy that I want to increase, and we are predicted to grow even bigger and bigger. And that's what I always, bet on and bench on, and I think that's where we're going to keep on going.
Yeah.
I've been in the cabinet as a minister 4.5 years ago. Let's go for 4.5 years ago. What was it? COVID. I was assigned in July 2020, 3 months into COVID. I've been into the trenches. I've been in the deepest parts of the economy. I've seen the worst. I think from there went up. And I've managed to change 40 legislation and laws and regulation to make the economy more agile, more advanced, more fast, more recovery, more speed, more younger. That's where I am.
Now I want to ask you, how do you see that political theater that we witnessed 24 hours ago? Because the markets, of course, have reacted. What in your mind was the most significant thing that we heard Donald Trump say?
So, as I said to you earlier, I think mostly within expectations. The thing I think that is happening is there's a change in the world that is significant, and probably the most significant one in our lifetime, especially in economies and markets. We're coming off of decades of relative stability. So since the fall of the Berlin Wall, China joining the WTO in 2001, we've been on this long stretch of globalization, global collaboration that led to a very efficient world, disinflationary even when things are going amazingly well. Governments were trying to get out of the way, free trade. It's been incredible. But that has been shifting. It has been shifting because a couple of things happened. One, while this created a lot of benefits and the kind of disinflationary pressures, it also created tremendous gains that were distributed very unequally in the world. So the rise of China, some of the emerging markets benefited, but also in the developed world especially, there was a hollowing out of the manufacturing base, kind of the middle class. You take that process slowly, and then you see political shifts in reaction to that. So when you see the inauguration yesterday, it's mostly a reflection of processes that have been in place for years. If you look at Europe, and you're seeing governments fall in Europe and in Canada, those are all reflections of changes that have been happening in the world for a long time. The other thing that has been happening over the last 30 years is a lot of economies became very interconnected. That had a lot of benefits because it created strength. But at the same time, starting COVID and then the Russia-Ukraine war, that vulnerability of, hey, wait, I'm not self-sufficient. Not only can I get hurt because of changes that are happening in the world, but people can also use that as levers over me in different ways, has come to be front of mind. And you take the series of things that I just said, which is the rise of China, the unequal distribution of the gains from the globalization, the political changes that brought about, the fact that people realize the vulnerability and how that could be used as a lever, it started a shift in the world over the last 3-4 years from a globalizing world. It's like a slow-moving ship that has now basically faced the exact opposite direction of what we call Bridgewater modern mercantilism, which is a world where governments are much more involved in what's happening. They're much more worried about the vulnerabilities of globalization. They would try to avoid trade deficits. I look at Trump's speech yesterday, and it's basically laying out that world perspective. And I think we should expect the world to continue that direction, and governments, investors, corporates should be preparing for that.
We saw the dollar moving. How worried should we be about the world's reserve currency with Donald Trump?
I don't see concerns in the near term. If there are worries about the dollar, they come from another one of these long-term changes that are happening, which is mounting deficits. One of the things that has happened in more populist regimes is the very easy environment, printing money, deficits that are only equivalent to wartime, but now they're happening at a time where economies are prosperous. There's going to be a point that if we don't deal with that, there's going to be a question about what's the right storehold of wealth. I don't think that is something that is going to happen imminently, but it's, again, one of those things that create a lot of uncertainty going forward.
Yeah. Nader, one thing that Donald Trump didn't say yesterday was any mention of Europe. And that leads one to suppose that, to the Trump administration at least, Europe is completely irrelevant. In your mind, what does that mean for Western democracy?
So I think the first thing I'd say, and I pick up on a couple of points Nir made, is that we should just really understand this as a kind of juncture in a longer change in the global economy and in global order. And we're sort of a third of the way in a kind of 3-4 decade period. I think for Europe, the challenge is that it is structurally in a very difficult place in its nature of its own economy. You have political crises in most of the governments. And then you have a president of the United States who will look at Europe partly through long-standing, very public grievances he has about European governments and certain European countries, but where the opportunity lies, and certainly this is the work we do with our clients, is to say that this is actually a moment, this kind of change in globalization, this moment where you have a outperforming US economy overlaid with Trump coming in with much more business-friendly, deregulatory and other measures, compounding that effect, where I think the opportunity for Europe, which right now looks a little dark because he didn't talk about Europe, he has these grievances.
Just a little.
Is actually one of the things we have to get used to in this new world is seeing countries as the main unit is going to be going away. So Donald Trump already is engaging with European businesses, has been doing since he was elected. And so thinking of the European opportunity set and where the vectors of European power and engagement will be with the United States, much more through companies, much more through individuals, again, what he's used to from the United States, I think is one of the very big changes Europe is going to have to get used to, because otherwise it's going to be a very, very difficult engagement, because fundamentally, again, part of what Nir was pointing to is you have in Donald Trump, and he brought this when he was first elected, a view which was such a break with US tradition, which was rather than globalization being seen as a key US asset, he came to office saying globalization is actually parasitic on the United States, and Europe, more than any other part of the world, is parasitic on the United States. You can debate this. There's something called NATO that has existed for 75 years that's done a pretty good job, but that has been the mindset. And so Europe starts this relationship in a challenging place, but I think where the opportunities will lie will be with European businesses and European investors.
Yeah. Deputy Prime Minister, How worried is Ukraine today about the fact that not only it seems Donald Trump is going to turn off the taps when it comes to economic support, but also that Europe, as we've just heard, is struggling itself to make ends meet, because that obviously has direct implications for how much they can give to Ukraine, whether it be on the weapons front or economically.
I've been listening very carefully today's address of our president, and he was, very concrete on that fact that Ukraine can bring more to European Union and to make it stronger, so European Union can also be able to provide security guarantees and other measures to prevent from others' invasion or wars. And I think that we need to be focused on. Of course, we are very focused on our economy and on being more self-sufficient, and it was a goal that we announced last year. So we put like 5 steps to be more self-sufficient because we understand that because of geopolitical risks and because of that stage where we are right now staying.
But if the U.S. isn't going to help pay, and Europe is in decline, who's going to foot the bill?
I would say that, just for your understanding, all macro-financial aid that goes from abroad are covering the social expenditures in Ukraine. Everything related to war situation, I mean, ammunition, weaponry, salary to our soldiers, we're covered by our own budget. I mean, by taxes of Ukrainian companies and the revenues that we get from the from export operation or revenues from the state-owned company operation. So it means that we need to incentivize the production within the country and incentivize the consumption within the country. And that's why we are very focused on development on defense sector, and I think that all European countries right now reconsidering their strategy on defense, on security, and everybody understands that this the production capacity that Europe has is not enough to protect themselves or give the confidence. I would repeat it once again, and so that's why I think that we would be able to increase the production within the country. It's one way, but of course we will see how we can support Europe, and Europe in such a way can support Ukraine, because I think that our common goal should be how to make European Union more self-sufficient in many senses. In economic and political sense, we need, I would say, I would talk like a Trumpist right now, to make European Union great again. But it's true. But it's true, and in a financial sense, I just want to reassure you that we are rather confident this year, because we set as one of the goals how we can get the self-sufficiency. It's like energy production and defense production, and one of the steps it was getting frozen Russian assets. So now you know.
Where are you in that process?
So we have the confirmation for 50 billion. Loan like that would be covered by frozen Russian assets. For now, I would say in our budget we have around 5. So it means that we have a source for reconstruction and for starting reconstruction, and that's why in financial sense I would say that we are rather stable and confident, but of course we did the increasing of the taxes last year. And in economic sense, I just want to give you the numbers. So firstly, a year of large-scale inflation, we dropped up to 30% of GDP. So 2023 we grew 5%, and last year 3.6. So we are also
growing.
That's something.
I look at your, listen to your KPI. You should put in your KPI some security guarantee. You're good in getting your KPI, so I think that you can be very helpful.
Yeah.
I'm listening to you. I think.
Minister, I want to ask you specifically, Minister Marri, about those frozen Russian assets. Does it bother you that countries can seize assets and then decide at will to distribute them?
Well, when we look at total risks, global risks, I'll take you back, Hadley, to the WEF risk report that has been issued 6 days ago. And the risk report that has been issued 6 days ago by the WEF, I was looking into it just 2 days ago to see the major risk on the economy. And you know what? There was nothing. The economic risks are even an economic downturn, which is I think number 15. High inflation rate, maybe 20. Top, very down on the list. Top 10 is nothing on the economy. What's on the economy? Let's focus on it. Says climate change, severe climate issues that might hit the planet Earth.
So you're worried more about climate
More-
issues than
exactly.
frozen assets?
Well, if we
it's
are in
also
the
very
session of a
strange.
wake-up call, right, for cooperation, I think the UAE plays a big role in the COP28, in the climate agenda, and in the green growth agenda, that the world needs to understand that there is a huge opportunity.
Yeah.
Now, when there is no economic downturn, and there's no inflation, no interest rates, risks that will slow down the economies, I think there is an opportunity that this risk report says that all the world economy is going to grow. And if we can go there, this growth is very important. Now, what's the IMF prediction, not just on the UAE, 5 or 6 or 7%, but the whole globe, even Europe, is going to grow.
In spite of itself.
In spite of itself, it's going to grow. There's a positive growth there, right? That's the opportunity. That's what we are seeing at the moment. We're starting the year, January 2025. I think there's a lot of, for me at least, 4.5 years in the trenches, behind, I have a lot of wounds. And I think it's good to look at, to see the world on a positive side today here in Davos. I'm looking at this risk report and say, thank God, economic risks are not there. At least they're not top 15.
Yeah.
And I think that's a great opportunity for us to really think. And by the way, the WEF risk report went from, they categorized it even on the age. The youngsters up to 70 plus. None of them saw any economic risks that's actually potential for the world. And I think that's where we should look at. Climate change, severe climate, weather conditions, and we're going to see more of that. And let's talk about, LA and the fire that's happening there, the risks of these fire that's happening in the dry atmosphere, the humidity. I don't know if it's a human-made, but at the end of the day, it has a climate aspect as well of what's happening worldwide.
I want to ask the audience just to weigh in on this one. Given what we heard from U.S. President Donald Trump yesterday, how worried are you today about a trade war with China? Raise your hand if you're worried about a trade war with China. No one. Nir, is this a good assessment?
No, I think that's exactly the problem that we have. Meaning, in all seriousness, I think we see the biggest problem is, we talked earlier about what the previous decades looked like. It's been awesome. And people just assume that what they've experienced is going to be the same thing going forward. We see a lot more risks.
Do you see a trade war?
We definitely see a world where aspects of a trade war. So I think Trump means what he says when he talks about tariffs. I think he means what he says when he talks about even Panama. I think, and others as well. I mean,
Yeah.
I think China means what they say when they're saying, hey, we're not going to stand by and watch these things happen. I think technology is going to disrupt and dislocate many jobs. We look forward and we see a lot of uncertainty. And it's interesting because when you ask the audience or when the minister speaks, it makes sense. It's what a lot of people kind of are geared towards. You also look at asset prices in the US and there's zero risk premiums priced in. So it means everybody is basically thinking it's going to be even more awesome in the next decade than it was in the previous decade. Now, it's not an impossibility. It could happen. But it's priced to happen in certainty. 100%. This is what's going to happen going forward. We see that as incredibly unlikely. We talked about the deficit earlier. All these things are going to, people know it's a big deal. They know something's going to happen. They don't know exactly how and what. We think that has to be taken into consideration as much more risk going to the next decade than there was in the previous one. And we just all have a bias to assume that we're going to keep being in the environment that we've been to until this point.
So Ray has recently said that the UK is in danger of going into a debt spiral, given the US deficit. Is that a bit of the pot calling the kettle black?
No, I think Ray has also has also advice to how the U.S. should be managing its deficit. I think he has views around what kind of cuts should be done in the U.S., and he has views about what would happen if the U.S. doesn't deal with the deficit. So
Yeah.
I think he's as critical about the U.S. as he has, and this is not personal. This is about studying history over and over again and seeing what happened in similar economies that have run into similar issues. Every time, we just have the memory of our lifetime. But
Yeah.
these things are happening over and over and over again, and we keep making the same mistakes.
What's your outlook today on the regulators? How will that change under Donald Trump?
I mean, the environment, again, I think you said it earlier, I think he means what he says. And I think the focus on within the U.S.,
Yeah.
it's funny because when you think about the U.S. as a participant in the global markets, they're going to be very activists. When it's talking about internal regulation, I think they mean what they say of deregulate. There's certainly an environment when you walk here in Davos, whether people voted for Biden or for Trump, I think there's a consensus of in the short term, this is a more business-friendly environment, less regulatory, less heavy, and I think that's the way it's going to play out.
Nader, you're half Danish. Tell us all about Greenland. Are you worried that there'll be an invasion?
Well, I think before speaking to Greenland, which I will, Hadley, I think it's really important for this moment for global businesses. This is a kind of signal from noise moment, and it's very much a moment to understand that really a lot more is possible by way of scenarios across the continuum. And that has everything to do with the fact that the structural effect, both of the geopolitical fragmentation and governments intervening much more. The big change was in the United States under Biden, was the IRA. And the decision by this administration to say there's a huge role for the government to play, primarily through tax credits, not just in addressing competition with China, but addressing resilience, addressing equity, what they thought, and certainly addressing the opportunity for the United States to be a leader in this going forward. These are very new historical shifts, certainly relative to the economy of the last 30 years. And so there's a lot that can go wrong in governments intervening much more. There's a lot that can go wrong in this fragmentation, having occasional routes this way and that. And certainly there's a lot that can go wrong where you have a situation where the United States, again, the designer of globalization, the chief beneficiary of globalization, meaning now to undo so much of it and starting with its closest allies. So turning to a country like Denmark, founding member of NATO, largest loss of life per capita among its soldiers in Afghanistan compared to any other country despite the United States, and finds itself, what it thought to be a joke, now being a dead serious challenge to what has been for a very long time, and you can argue, of course, it's some kind of colonialism historically, but self-rule by the Greenlandic population under Danish sovereignty. And I think what we're seeing is that this is another aspect of the world we're entering, is a lot of conventions and norms, a lot of which were not necessarily good for the global economy, not good for disruption, not good for innovation, but a lot of norms and conventions we may start missing or going out the window. So for example, simply to say, I kind of like Greenland, it's good kind of real estate play, there's some security, geopolitical aspects to it with Russia and China, but to go so hard at an ally and basically now put a very difficult onus on the Danish government to justify why it should have its rules. So where does it end? Again, anything is possible.
Yeah.
The Danes are hoping they can play this out, that attention may go elsewhere, but it's entirely possible that the Greenlandic people decide to have a referendum, that referendum goes in favor of independence. And again, this is not geopolitically or globally a significant event. What is significant, I think, is the precedent of it, and that we shouldn't lose sight of.
Yeah. Your Excellency, when you take a step back and you look at the region, at the Gulf Arab countries, is Donald Trump good for the Gulf?
I think when you look at the Gulf and region, have a very strong relationship with the United States for the last 50 years. Even us, we've been working with the United States. We have about $40 billion worth of trade coming in. We're the #1 partner for the US in trade for the region. And I think we're going to go, what you want for the next 50 years is we want more growth. Now, the region have a very strong relationship as well. Sultanate of Oman and the Kingdom of Bahrain has a direct free trade agreements with the United States. We do have a huge as well growth happening. The last 5 years or 4 years, not considering COVID year, but these years has been a very strong growth for the GCC country, and I think that's what will reflect even more and more, where we like as well to see that growth happening further. Yeah. Now, what we want in the region, we want more peace, and we want more stability, and we want more growth for the region, and that's where our leadership, His Honor Sheikh Mohammed bin Zayed, is focused on, is to keep that kind of peace happening and stability happening, an opportunity for youth.
Yeah.
Let's go to 2016. When the UAE, His Highness Sheikh Mohammed bin Rashid announced the probe to Mars, right? What did he call it? He called it the Arab Hope, the Hope mission. And why is it hope? And why is it Arab hope? He wanted to create hope for the youth of the region. That there is a nation in the region that focuses on science and technology and really pushes further these buttons forward, you know. And this is where we are at the moment. And the UAE will really focus on this to create that kind of hope as well for the region and as well create opportunities. I am tasked at the moment to focus on space cluster, economic space cluster, focusing on diversifying my economy towards space. That's something which is very interesting for us. We want to push for that. I have about 50 companies of space in the UAE. I want to grow that, at least
Do
to
you
500.
anticipate working with the United States to go to Mars?
Of course, of course. I would like to, there's the Florida space in Florida I would like to visit to understand how can we actually grow a bridge together in the space industry, in space cluster, especially with the United States on that. And this is an area where there is technology, there is science, there's innovation, there's a lot of things that's happening around space. Now going to Mars or going to the moon, I don't know if we're going to have a life over there, but the kind of the science behind it creates what we have today, microwaves, other technologies that we're using in our household. So the kind of overspill that happens from these kind of research goes back to consumers as well and helps the economy even forward.
So Donald Trump, good for the Gulf?
And I think it is going back to the relationship with the United States. And I think we need to look at from a macro level, a level where we have a strong relationship and we want that strong relationship to even go forward, you know, with Trump.
Yeah. Nader, how worried are you when you look at the end of the commodity supercycle in China and the slowing growth of China and a Beijing that has not, at least so far, come forth with a plan to get their economy back on track, which was what had been anticipated?
A question for me?
Yeah.
I mean, I'm not.
I can answer that.
I know. Yeah. I mean, I'm not. Worry is the wrong word. We are indifferent. At Bridgewater, we try to understand what is going on, and then we can make our outlook in either direction. So to us, it's much more just about objectively understanding what's going on. And I'd say two things. I mean, the question of, in this world that we've kind of described in this conversation, the rise of China, I think the long-term role of China as a part of any investor's portfolio is actually clearer than ever. In a lot of ways, again, put your opinions aside. If you're saying, what I need is to have geographic diversification, because everything got really concentrated in the US over the last 15 years, 75 cents of every dollar that went into equities in the US. So China makes a lot of sense. If you look at places that diversify from an economic environment perspective, so China is in an easing cycle if they choose to do, as you kind of suggested, the US is in a tightening cycle. So you're saying, okay, I don't want to just have bias to disinflationary pro-growth environments. It makes a lot of sense to anybody trying to balance a portfolio to actually say, how do I get exposure to China? By the way, the UAE has been very smart and deliberate about doing that consistently and kind of constructing their portfolio in ways that make a lot of sense. Then there's questions within the Chinese economy of, are they going to take the steps? They have the tools, they have the means, the roadmap is kind of pretty clear to stimulate their economy. It's anyone's guess. I agree that if they won't, they will keep going through what we call an ugly deleveraging, which is going through all the pains of austerity versus stimulating the economy, stimulating the demand side of the economy in order to kind of create the prosperity. In either case, China has a very, very important role. And let me say one last thing about that. I wouldn't say that about every area. We talked about Europe as an example earlier. When we look at kind of where the world is headed, China has clear advantages that gives it a big space in anybody's mind. There are places like Europe that are structurally disadvantaged. They are getting outcompeted by the US in innovation. They're getting outcompeted in manufacturing by China. They have a governance problem. It's not easy to make big. So in China, they can make a decision tomorrow. We're going to ease. In Europe, it's a lot harder to make big decisions. So you're not only disadvantaged, you also have the governance problem. It just shows kind of how divergent the conditions are. US, Europe, China, Japan, and how every one of us has to be looking at the world through that lens kind of going forward.
Can I jump in?
Yeah.
You're in good hands, so I'll answer this as well differently. I want to pitch in saying that when you look at the economic complexity of China exports, right, these are the KPI that economists looks at, the complexity of export. How complex is your export product? China is one of the top. China doesn't have an external problem. China has an internal problem. And let's differentiate between internal issues with commodities and prices and real estate problem. China has a real estate problem. They do not have an export problem. With their export complexity, they are very strong. They are one of the top in exporting everything. Now, when you look at it on GDP per capita, when you put the export complexity of China, but on GDP per capita, it's very low, given the diversity, given the land size, given the population. It's one of the low. But what does it say? It says that there's a lot of opportunities for China prosperity, people of China, to really prosper and grow because their economic complexity of their exports is so high and their productivity is even higher. That's an economy which is very strong. Now, when it comes to prosperity and GDP per capita, not GDP, total GDP, but per capita, they're very low. But there is an opportunity. This action is going to catch up. And if it catches up, China will not have a problem. They're going to be strong. But they have, at the moment, kind of wait and see. They had a stimulus program to stimulate the internal, China economy. They're waiting and see to see how that stimulation is going to, work in effect. But I think they're going to come back again, and it may be stimulated more. But this is an internal China economic problem. It will not affect the world.
Do you
the slowdown
anticipate?
will not affect the world. They will still export complex products. They will still export to the world, and they will still push for that.
Do you anticipate the China-UAE relationship will be a flashpoint again for the Trump administration?
Well, we have $80 billion worth of trade between us and China. China is one of the top trading with us, but not with us totally. We export and re-export China products as well to the world. Now, the movement that's happening as well, this is something which is important. That complexity of export is needed. Now, you say we don't get from China, where is the inflation rate going to happen? There's a lot of inflation that will really hit consumers globally, UAE, region, and the world. You cannot say, I need the world without China. And you cannot have the world without China. Let's be clear on that. You need China in the kind of trade domain, and you need to really focus on the kind of export complexity marker of their export. And that's something nobody looks at. We look at it, and we see how important to complex your export. Are you exporting 5 products, 6 products, 7 products? Or are you exporting thousands? And how important it is for consumers and consumptions around the world. That's the kind of narrative we need to be speaking about.
Nader, weigh in on this just briefly, because I was speaking with Joe Kaiser last week in Saudi Arabia, and he was saying to me, well, the whole world isn't China. More is happening. What's your take?
Well, I think the first thing absolutely to underscore is that when it comes to advanced manufacturing and robotics and the application of AI in advanced manufacturing, the Chinese are doing phenomenally well, and probably better than anywhere else in the world, including the United States. We haven't talked much about AI, but I think I would emphasize for the topic of this conversation, and really that captures a lot of what we're talking about in terms of government intervention and geopolitics, 2 really important things are happening around AI right now. One is that there is a growing nexus around the AI energy infrastructure combination there, where you're seeing new opportunities, new investments, and new partnerships happening, both globally, but particularly around data centers and the like. But the second aspect about the AI question, which is important and speaks to what we're talking about, is exemplified in what was announced last week by the Biden administration in their AI diffusion framework. And basically what they did there was to say that when it comes to the export of high-end chips, we're dividing the world in 3. The United States is going to divide the world in 3. 18 countries, they can import all they want. A bunch of countries that will never be able to import any of these high-end chips, and everyone else in the middle. And I think what that tells you is that we have geopolitical competition at the top. This is all about outcompeting China in terms of where the AI frontier is. Then you have government intervention, and then you have, we're going to see, I think, both from the Trump administration, but also certainly countries like UAE, which will be able to position themselves as the kind of partners that are both responsible at home and responsible globally, so that they can be part of this advanced manufacturing. But right now, it's also an example of where the outperformance of the US economy and US companies at the frontier of AI, overlaid with the new Trump bullishness on this, overlaid with the view that the United States can have this chokehold on the global economy, that tells you a lot about where the global economy is going to go forward.
It's interesting, isn't it? Because just to take it from macro to micro, yesterday when the president was signing his executive orders, he was pausing on the order on TikTok. There's a Russian proverb that says, and I'm sure you know it, which is, if you muddy the waters, then you'll find some fish. And that does seem to speak to his doctrine, at least for the first administration, and as we've been discussing, most likely for the second. Are you anticipating that the U.S. is going to get a chunk of TikTok?
I think this will settle not where we are now and not with a total ban. So I think where the exact transaction ends up, I think is unclear. I think the bulk of the U.S. national security establishment, including a lot of the people who are coming in with Donald Trump, have very substantial concerns about TikTok from a U.S. national security perspective, but you also have 107 million users and a very important source of business and economic growth. So I think it will land somewhere in the middle, but I think that's a kind of transaction that in the kind of Trump approach to Xi on his phone call, Trump going to Beijing, becomes much more possible than you would have imagined a month ago or a year ago.
Deputy Prime Minister, just looking at the Ukrainian economy, I've spent a good deal of time in Ukraine. I've spent a lot of time in Russia. And I would love to ask you to just give us an assessment of the corruption in Ukraine today. Where are we? How much has been cleaned up?
I think that we have progressed a lot during the last 3 years, and at the beginning of the 90s, there was a few oligarchs that owned, I would say, sectors, not only enterprises. So, and during this last 3 years, actually, maybe it would sound very vocal, but our president, he put like a #1 task for himself to beat the corruption and to fight with the oligarchs. And you might see that now on Ukrainian market, so actually the power less and less and less, and a few of them are just out, just fled from the country and just leave all their assets and left. So I think it's important. And also, if you might look at the index, so we have increased incredibly in the list of the countries that have the risk for corruption. I will give you the correct name, but actually I think that we are following all the requirements from US side, EU side, in charge of in terms of corruption and anti-corruption, in terms of judicial reform, in terms of economic reform. So, and during the last year, I can tell you definitely that we have not. So we have implemented all requirements that we have. And if you look at the, it calls in Ukraine matrix of reform, we are trying to combine all requirements from the partners in all areas and in one document. So if you look at the matrix of reform, so last year we implement around 200 indicators. So 200 indicators in different areas, because we understand that we need and we want to be the part of EU. It's our irreversible way. We see ourselves as a part of EU, and we need to go this path. Also, we understand perfectly well that we need to improve our business environment, because we need to reconstruct the country, and it should be reconstructed on the new basis, with the movement of new technology and green transition. So, and we understand that we need to improve this business environment. And oligarchy is one of the characteristics of the former Ukrainian economy. So now I would say that it's absolutely different ecosystem on the ground. And I think that we are, as I said, doing our homework. Of course, there are a lot of things that need to be improved, that for sure. But I think that now we are keep fighting and working and implementing reforms. And our main task, of course, is to get settlement or to end this war or active phase of the war. Because I'm, when I'm listening to the risks that globally companies or population see, and there is like no war. For me, it's very strange, because I think that you're absolutely right. When you see about the long-term perspective, anyway, you need to bring peace to the region, and you need to bring safety and confidence. And if you have the war in one of the continent, So actually it has like butterfly effect. I remember perfectly well that at the beginning of large-scale invasion, some countries in Africa just recognized that they have been receiving wheat from Ukraine because the price become like $450 $50 per ton. So it was one shock. Another was a fresh example. It was covered by Bloomberg when Russia attacks underground storages of gas. So it also caused the increasing of the price on the European market. So that's why I don't believe in the list where there is no war risks and there is climate change as a risk. Because Ukraine seems to be the most contaminated country in the world because of the mines. Yes, because of the mine situation. We have like 30% of our territory is full of mines, and we need to clear it during the decades. And so that's why for me, I think that what is the most important globally. Because yes, I agree that it's a period of turbulence. And we are witnessing this turbulence. I think that last time we saw it after the World War II. But we need to be focused on bringing peace and stability to all regions, and I think it's the main priority.
Deputy Prime Minister, it is no doubt that President Zelensky has done an amazing job in keeping Ukraine in the headlines, in spite of the fact that most of the world has a very, very short attention span. But do you believe that President Zelensky has a place in a post-war Ukraine?
I think it's better to ask him on that. But he's definitely a person that changed the global order, even now, when the war is not ending. And of course, it would depend on him and on the ending of the war. Because there was many discussion on the second term of his presidency, so I think that it's something that he should answer to himself.
I would be happy to talk to him anytime. Ladies and gentlemen, unfortunately, we are out of time, but I just wanted to take one moment to ask the panelists to just do a round robin. We're talking about someone who changed the world. Donald Trump presumably is going to change the world again, given what we heard yesterday. Nader, if you want to kick off briefly, just giving me an assessment of, are you positive or negative in this outlook for the next 4 years?
I think there's every reason to be cautiously optimistic. I think there are a lot of tailwinds with the global economy. I think the inheritance that Trump has, both in terms of the U.S. economy, as well as a number of these geopolitical crises, be in the Middle East, be in Russia, Ukraine, even in East Asia. I think there is every reason to believe that this actually can be a positive environment, not a reason to be complacent, not a reason to think that things can't go wrong or markets can't correct or debts don't matter. But I think the inheritance is actually very strong, and stewarded in the correct way, I think we can be optimistic.
Nir, are you bullish on Donald Trump?
Neither. I mean, as I said, I think if we embrace the change that's happening, it could be great, because that change would lead areas to be more competitive that's been complacent, and we talked about some of them here. It'll lead to resolution in some of the global conflicts. If we don't embrace the change that's happening and we keep driving the world looking backwards, I think it could be really tough, really fast, and it will teach our generation that hasn't, I mean, I'm from Israel, there's Ukraine, there's pockets of populations that have gone through adversity, but much of the world has not in our generation. It's been just a great period. We might bring upon ourselves the first real period of adversity if we don't embrace this change and really kind of shift what we do in order to handle it well.
Excellency, excited about the next 4 years?
I think I'm very excited and very positive. You're talking to a tribesman, a man from the desert. 50 years ago in the UAE, we had nothing, right? No Burj Khalifa, no Emirates Airline, no DP World, nothing. And today we live in scarcity. 95% of our food are imported. We desalinate the sea to drink water. So we're talking to the wrong man. We see opportunities in everything to transform the world that we live in, and that's where we are coming from. His Highness Sheikh Mohammed bin Rashid, the leader of Dubai, and His Highness Sheikh Mousavizadeh, the president of the UAE, these are tribesmen who have the ethnicity, the ethical aspects of to find opportunity from deserts to the world, and we are full of abundance to the world, that we give the world so much things that we don't have. We do not live on lakes. We do not live on gushing rivers. We desalinate the water. We cannot grow. 95% of our food are imported, but we can create opportunities. That's the opportunity. So when you ask me about positivity, of course I'm positive. If you asked me last year, I would say, yeah, I'm still positive. That we are still going forward and the world is great.
Deputy Prime Minister, is Donald Trump good for the world?
I have the most complicated question from you.
I can help you.
It's because we're women.
I know that you can answer all questions that we have today, but I think that the Trump administration or President Trump would be very efficient if he really can end up a war in Ukraine. And I think that for me, it's one of the criteria, KPI for myself, of his efficiency. Sorry for that. But he also has some promises. He gave it publicly. But in general, I would say that Ukraine is very optimistic if we would be able to end up this war during this year. And I just want to repeat, but sorry, it's our pain, and we'll be able to get some guarantees. So we are very optimistic as a nation. You might see that we're showing resilience, and it comes from like many places, and Ukrainian business are extremely resilient, extremely innovative, and they're they're looking for the hope in the darkest time. And yesterday on this evening for Time 100, I gave one example of just a very short example, but it's a business that are growing flowers near Kiev region, and during the large-scale invasion, first day, so the village have been occupied, and owners have been fled from the country, and people in this village, they have been hiding in these greenhouses. And when the owners returned back, they were surprised that the people that was hiding in this greenhouse, they found a relief in taking care of these roses. Can you imagine, just under the bombs, under drones attacks and missiles attacks, so they have been taking care about these roses. And for me, it's an example of resilience and hope. And you ask me about Trump. So you look at Ukrainian business and our people, and this is just one story, and another one, it's a publishing house that have been destroyed like 6 months ago, and now they restored. And yesterday I gave notebook that have been published there, and there are like 100 stories. So that's why in general we are very optimistic. Of course, we want from Trump to be more helpful, that for sure, and China as well. Because you're absolutely right. You're absolutely right that it's impossible to say there is no China during the negotiation, because it's even for Ukraine, it's biggest partner, the biggest trade partner. Yeah. So that's why it will be challenging time, and I would say that this year would be historical. I absolutely believe in and feel it inside, but we're rather optimistic. I like this, cautiously optimistic.
Your Excellencies, gentlemen, ladies and gentlemen, thank you so much.
Thank you.
Thank you so much.
Thank you.